guys, welcome back to my channel, and don't forget to like, comment, share and subscribe. New Zealand house price fell in July with the median price recording its first annual fall since 2011. The Real Estate Institute of New Zealand said on Thursday. The seasonally adjusted median nationwide house value in July fell 2% compared with the previous month and was down 1% year-on-year, according to REINS. The unadjusted median house price was down 1% on year, while the median property price is showing an annual decrease. Affordability remains an obstacle for many, which is now being driven by rising interest rates, inflation, and tighter lending criteria, said Jan Beard, chief executive at REINS in a new release. House price in New Zealand jumped more than 40% in the 2 years to November 2021. However, a combination of tighter credit, more housing and rising mortgage rates is now weighing on price. Kiwibank senior economist Jeremy Chasman said in a note that the first fall in 11 years might be a shock, but it needs to be noted that the price falls only put house price back at levels seen last May. Nevertheless, house prices have further to fall in the current cycle, as credit conditions remain tight and confidence is lacking, he said. The Airbnb, which must consider house price in its policy deliberations, began raising the cash rate in October last year, describing house price as unsustainable. Since then, it has said it expects price to fall 15% from their peak in November. ANZ Bank said in a note that housing was now decidedly cool, and there was not much in the economic outlook to stop that. Gross domestic product (GDP) grew 4% year-on-year in the second quarter, the Ministry of Trade and Industry (MTI) said, slower than the 4% growth seen in the government's advance in system. Downside risk in the global economy remains significant. Further escalations in the Russia-Ukraine conflict could worsen global supply disruptions and exacerbate inflationary pressure through higher food and energy prices, said Gabriel Lim, Permanent Secretary of MTI at a media briefing. The weaker growth was partly due to the slowdown in electronics manufacturing. According to MTI, the ministry said weakness in China's economic outlook, a key market for petroleum and chemicals products, had also adversely affected Singapore's growth prospects. The Southeast Asian financial hub is often seen as a bellwether for global growth as international trade dwarfs its domestic economy. On a quarter-on-quarter, seasonally adjusted basis, the economy contracted 0% compared with the government's expect 1% estimate and 1% growth in the first quarter. Our current baseline is that GDP will return to a slight positive quarter-on-quarter growth in the third and fourth quarter of this year, said Yong Yik-wei, chief economist of MTI at the media briefing. So in other words, we do not expect traditional recessions. Singapore defines two consecutive quarters of quarter-on-quarter economic contraction as technical recession. The MTI said it would narrow its 2022 GDP growth forecast range to 3% to 4% from 3% to 5%, adding the external demand outlook for the economy has weakened compared with 3 months ago. Okay, thank you. Maybe that's all from me. Thank you for watching and don't forget to like, comment, share, and subscribe.